say make money, money, make money, money, money.
Make money, money, make money, money, money. Money makes the world go round. I'm the talk around town. Remy gave me the sound.
Welcome in to Just the Tips podcast by the Stock Jocks. You've got your three favorite jocks here. I am George, playing host today. And with me I've got Bruce the Bold and also Gordo. What are you, Gordo? What's a good G name for you?
The Great, the Girthy.
Gordo the Great.
The Girthy.
But
in my Alpha, I have Girthy Alpha.
Girthy Alpha. How are you guys doing?
Fucking living the dream, man. Living the dream.
Tired, dude. Tired.
All just beaten down by parenting and life.
Yeah.
I had the kids all day.
Yeah, tell me about it.
Yeah.
I had a 3-year-old throw up 12 times yesterday. I was home alone with, and at least 3 of those hit me. So it's living the dream.
Projectile. My 3.5-year-old is aggressive potty training and peed herself with a playground today, and so we got lots of fun, parenting to go around. But
I don't think I can top that. I had like 35 back-to-back soccer games today, so
that's just you just put your kids.
I'll take that trade.
Just give them an iPad and leave them in their room. Like, why would you sign them up for that? That's just like, why are you punishing yourself?
So that they don't watch iPad all day in their room.
That's not what you guys do? Well, me neither. I read to them and we write things together. No. So, yeah.
It's good eye exercise. I have, before we hop into it, I was going to say, Bruce, I had Easter it's been a few weeks since Easter, but I realized that we're more alike than I thought. So I was sitting there, we belong to this little museum, it's like an air museum, and we went there for Easter. And on a helicopter comes the Easter Bunny. And it didn't strike me until literally he was landing. And I was like, I am Bruce! The Easter Bunny is being delivered from the sky in a helicopter. I am part of this 1%er that's watching their Easter Bunny be delivered here, via the air. So
I think it's more common than you think. I think Easter Bunny's on top is it's not the 1%. It's like the 55% at this point. Maybe the 51%.
The 51% have their Easter bunnies delivered by air. I always thought they hopped in, but I guess ignorance on my part. Anyways, let me intro the pod. This is, like I said up front, Just the Tips by the Stock Jocks. This is where we, whenever we choose to do it, get on the air here and debate a stock. One of us will take the bull side, one will take the bear. And we'll argue each of those cases so you, the listeners, can hear each side and make your own decision on what you want to believe about the stock. We will reveal our own positions at the end, but you'll at least get to hear each side from our jocks today. So I believe, Bruce, you're going to be the bull today. Gordo, you're going to be the bear. But maybe before we get into that, we can just chat the market for a minute. It's been since the last time we chatted, which was just around the CoreWeave IPOs. That was our last episode. The market was a little crazy, but it's continued to go even more crazy since then. And what's been interesting is we've been down, at least on the NASDAQ, as far as 20% true correction area when the tariffs were said to be kind of at their max. Trump has since backed off a little bit, and you've seen the market rally. There was 8 or 9 days of pretty strong rallies there. And when you look at where the market sits now, it's kind of amazing. We've done a full, almost round trip. So year to date, the S&P 500 is only down 3%. The NASDAQ, I think, is closer to 7% down, which for everything that's happened, you're hearing recession calls, you're having some companies not be able to give a forecast. Doesn't feel that bad. It actually feels pretty good if we're only down 3%. There's still a lot of uncertainty. There's still 50% tariff on China. So what do you guys think about that? Does that feel right to you that we're only down 3% in the S&P 500 after everything that's going on here in the world?
No.
All right, next topic.
I think it's maybe a commentary more on the fact that people are not believing like Trump's posturing as much as they were in the beginning. And they think that like eventually he'll just back off some of the things that he's proposing. I think the other piece is like it does feel more self-inflicted than systemic. Like in previous recessions or periods where there's been significant decline, it's been like more of a systemic thing, like the mortgage situation, the great financial crisis, or like the internet bubble or something like that. This is more self-inflicted by, somebody who is imposing tariffs on other countries and almost inducing like a recession single-handedly, where he could turn the clock back if he wanted to, or he could make different decisions that would change kind of the impact of the market. And so I think it does still feel like the market's searching for direction, like it's going to jump like 1 or 2% every day for the foreseeable future. But I don't know. It doesn't feel like people think it's systemic. And also, like, the jobs reports have been relatively strong. Like, inflation's sort of, moderated or modulated, come down a little bit. So, like, some of the things that maybe he can't impact as directly or will take longer to impact feel like they're relatively stable.
Well, I'm kind of freaked out myself. I think that if you look at, like, this guy from the Port of LA saying that shipments are down, like, 40%, and from China, like, down, like, 80%, and like, it's just a matter of lag. Like, the prices on the shelves don't reflect the fact that there's about to be a massive shortage in a lot of things. I'm meeting a lot of business people out there. They're like, yeah, I just got hit with a huge tariff bill, or my customers are getting hit with huge tariff bills. I'm not hiring right now because I don't know what my forecast is going to be. Like, it's just like people are, like, sleepwalking through. It's still a train wreck. Like, 10% tariffs are real, whatever for China. But, these are really massive tariffs, very disruptive.
140, 150.
Even the 10%, yeah, thank you. But, even the 10% is still yet to really be felt. And so I kind of feel like we haven't even begun, with the approval rating kind of plummeting for Trump, like we have not even begun to see, the economic impact. And I get your point, Brucey Boy. Like, there's kind of like this is all kind of temporary. The really long-term, like, productive capacity of the United States probably isn't changing. Trump is proving to have all the moral backbone, or the sort of backbone to withstand criticism that he's always had, which is zero. See, everybody freaked out. He backed off massively, and so people think that he's going to just back off again. But if it's a 10% tariff, like, that's a pretty nasty shock to inflation, and we haven't seen that in the data yet either, right? So I would just say, like, that's just kind of like, I'm really kind of scratching my head. Like, I feel like markets are usually more forward-looking. It's incredibly Pollyanna. Like, I can't get my head around how the market has fully corrected. By the way, David Sachs over on All In is just pointing to this very thing about how just like, oh, look, like, Trump's a genius again. The market's right back to where it was. See, we're smart. And so, and it's just become this like marathon, advertisement for Trump about how smart he is for having brought everyone to the table, happy with 10% tariffs, when the week before that we were, status quo was not as favorable. And it's a bunch of horseshit. So I don't know. I feel like the other shoes are going to drop. I think it is trying to find direction, but I think it's down. Like, I can't, at a minimum, trust is broken. People don't have certainty. So, like, from my perspective, I can't believe the stock's only down, or the stock market's only down 3%. Like, that's crazy.
I agree with you. I think, Bruce, I think the other thing is, right, like, all these trade partners are now out searching for other sources. And so some people say, why do you come back to the U.S. after they've just put you through this? So don't you think some of these, like, relationships are damaged permanently? Maybe they move elsewhere, and international trade for the U.S. is never going to return in the same way?
I don't know. I think, like, the U.S. is too important of, like, a trade partner, or too important of, like, a political ally. We have too much sway in, like, the international ecosystem for folks to just write us off. Like, a lot of these, like, major trade agreements have taken, like, decades, like, to form and to be established, and these supply chains have been built over 10s and 20s and 30s of years. Like, it's just impossible, I think, to turn this on and off as quickly as, like, maybe some people think. And, like for better or worse, probably maybe for better, like, these are 4-year terms, right? Like, the administration's going to change in 3 years, and, like, there could be early signaling in, like, a year and a half, right, with the midterm. So I think people don't view this in the same way they view, like, an agreement with, like, Russia or something, where you effectively have a dictator who might not be out of power for 25 years. Like,
Trump's running for a third term, haven't you heard?
Yeah, he's gonna run Vance and then be vice president and then take over on day 2, like Mendeleev.
I know. I do secretly want like it to be sort of a shadow election between like Vance and somebody who makes Barack his vice president. And then they
That's the theory I heard. Did you talk
all
about it
flip
last
through.
time?
I think we talked about it last time. Yeah, that would be like a classic American election.
Simulation is broken. I guess something is
That
wrong
would
with the
be-
simulation.
I think everyone would cheer for it. That would be like
This is
a
not the
UFC
original
fight.
timeline. There's no way this is the base time simulation. No way this is base reality. I'm just putting that out there. I've
So I guess when you go through all that, are you guys buyers? Are you sellers? Like
Seller.
Where do you land?
I'm a seller.
I don't know. I mean, it's hard. I think it's still like buyers of the market, or I mean, generally I think about the market through like individual equity lenses, but I think like there's opportunities for high quality companies where they'll get trashed in the markets just because of the volatility will be good buying opportunities. That might not be today, but it's probably like 10 days ago, or it will be like in the next 10 days kind of thing. So I think there's like these opportunities where the market's going to go down, really affect prices, and like you can get into like great equities, I think at reasonable values.
Well, you look at even what about tech? Since we tend to focus on tech outside of our one episode on Lululemon, which is just tech hiding in yoga pants. But
Yeah, it's some really high tech stuff. Space materials made out of rare earth,
rare.
rare subline from China.
But you look at tech, it's down 7%, right? And then you just saw earnings from Microsoft, which were fantastic, right? You saw strong earnings. You saw decent earnings from Google. You saw
Apple.
a lot of Meta. Yes, Meta had excellent earnings as well. And it seems to be down more than the broader market. So would you see that as a buying opportunity, I guess, in this market? You also have Nvidia that's down 14%, but there's more, I think, going on there than just...
Oh, we should talk Supermicro's
recession.
with too. They guided down pretty big. It sounds like they're push-outs in Nvidia land, but it's all going to be fine. Like a quarter from now, right? Just like the tariffs.
just like the
I think,
tariffs.
I think specifically for some names, there's really strong buying opportunities. I think like the X factor for a lot of these companies, like maybe not Microsoft as much because they'll be, I think, a huge beneficiary, but like Meta, for example, like how AI will impact their operating, but like same thing with Google or Alphabet or whatever, like it's kind of TBD. The risk isn't more, or the risk is more, I think, in like how AI impacts their business as opposed to maybe like the day-to-day or week-to-week or quarter-to-quarter fluctuations in the market. Like that feels like more existential.
Yeah, I tend to agree with you. I'm a buyer of some of the tech names, but selling more of the cyclicals, to be honest with you, that feel like they're overvalued at this point. So I've started building my short book again here as the market's been rallying up a little bit, at least on some parts of the market.
Yeah, I mean, I think
I see Bruce shaking his head.
I think you look at like Netflix and like stuff that's just not exposed to tariffs on the long side, and there are just stuff that's got disruption in the supply chain. It just feels like the risk is not priced in. These stocks were expensive before. Numbers have not been cut really at all. Like it just feels terrible.
Well, there's some companies that refuse to give guidance at all. I'm surprised that hasn't shook the market more, right? Like,
Yeah.
wasn't it Delta Airlines? It's like we're not giving a forecast, like we can't, or was that United? One of those two. So like, I mean, there's companies like that. I know I've talked to a friend of mine who was saying we can't guide. They're in the semi space. Like, there's no way we can guide. We have no idea. So I don't know. I think it's going to be like, I'm surprised that hasn't shook the market more than it has. I think there's still more noise that's going to come out here, and who knows what Trump does tomorrow. So to me, it feels asymmetric, like across the market to the downside. Like there's just more downside risk. The market's not cheap to begin with, and then you have all these potentials for disruption. Like it feels skewed to the downside.
Absolutely. I think that seems kind of... Are you on the other side of that, Bruce? Are you Pollyanna here, or are you equally... It seemed like you were kind of more positive that this is just a little bump in the road, or are you just sort of explaining what people seem to be thinking?
And what's your time frame?
No, I think generally there is more risk to the downside, but I think it's like more a buying opportunity than a selling opportunity. I don't know. Like, I think like being short in this market is still relatively dangerous. Like, I do think Trump is still, even though this first 100 days have been a little bit different than the last term, I still think he is predisposed to try to turbocharge the economy by any means necessary, like whether it's trolling Jerome Powell to cut rates or whether it's, doing other kind of, non-traditional things to kind of juice the economy and like claim that it's his. I saw something today that I thought was pretty accurate. He's like, when the economy is down, even like today, that was Biden's like issue or
Economy, yeah.
Biden's economy.
Biden's stock market.
Biden's stock market, and when it goes up, it's his stock market. Like for the exact same stock market, he's claiming and blaming. So I don't know. I think he is still like generally predisposed to try to take the market higher, even though it's been like much different than I expected in the first 100 days.
Mm-hmm.
Yeah, he's paying attention to it, so that's, I think, a positive sign at least. Before, we weren't sure he was using it as the same barometer that he did in his first term, because his first term he really, really cared about the market and what direction it went, and then everyone got nervous because this time it seemed a little different, but he is paying attention. So with that, should we move to the main event, guys?
Yeah, let's do
get ready to rumble. All right, before we jump into the ring, I just want to remind our listeners that this is not investment advice. These are just our opinions. We advise you to consult your investment advisor, accountants, lawyers, whoever else you talk to, maybe your dog, before making any investments. And these are just our opinions. But with that, in this quarter, weighing 100 and, what is it, Bruce, these days? 195 pounds?
Shh.
What? Sorry.
Wearing a rucksack.
195 pounds. Oh, weighing in at 195 pounds, 165?
Yeah, I was gonna say
Look at those guns. There's no way. All right.
You're still not that big, dude. He's just kind of.
You know what he admitted to me this week?
What do you bench? How much you bench? How much you bench?
I don't bench. That's the thing.
It's all buys. It's all buys. And no tries.
I heard he was very buy. He's all about buy. No, Miami.
Swinging both ways. All right. Today we're talking about Coinbase. Bruce, I believe you're the bull, and Gordo is the bear. So let's get into it. And I see you've chosen the laser template here with your PowerPoint.
Yeah, the laser template. The laser template is here to stay, mostly because it makes George so mad. I don't think I can use anything else at this point. I will give credit to Gordo though for the title here. I definitely just bit this completely off of a text thread in which he suggested using Coinbase as the title of the presentation. It's a good title. Gordo definitely knows how to write a title here.
You get a presentation mode, by the way. Go to full screen for the so we don't have to see your whole. You had it there for a second.
I mean, he's finally learned how to share on this platform.
There we go.
I don't push it too hard.
There we go. Coinbase. If everybody doesn't remember, I had to Google this because I first heard base, and I was like, "What the hell are they saying?" And it's kind of like a little MAGA-y, a little bit of an alpha male thing, saying you're base, like you just have your own beliefs or whatever. Fuck everybody else. I don't know, like something like that.
Well, before we jump into it,
I had looked it up too a while ago, and I still am not like totally clear what it means, but I think it's like a Chad type thing, right? Like or Sigma, as these kids use it today. It's like cool, positive, but like slightly maybe like right biased. I don't know.
Yeah, kind of like dickish. There's a little dickishness in it. All right, so the Coinbase, big swagger, BSD.
Yeah. Just tell me before that you will answer the question for me. Can I trade Melania coin on here before you're done? I just want to know that.
Don't know. Doubt it. There's places you can trade it, but not here probably.
All right.
So Coinbase, maybe I'll just spend a couple minutes on maybe what they do. I didn't do like 35 slides like George, so I'm just gonna talk through it a little bit.
Thank you.
I wanted to keep this.
I'm very visual.
Sweet. So Coinbase is really, in a lot of ways, the gold standard of crypto exchanges. That's where they started. Started as a venture-backed company several years ago. I want to say like in the early 2010s. Should probably know that, but they were one of the original kind of centralized exchanges. Is how people phrase these exchanges today, as opposed to decentralized exchanges, which don't have like kind of central authority, and you tie in your own wallet to these exchanges, and it trades more based on supply and demand of the exchange. Coinbase is kind of like like a Chuck Schwab of the crypto world in some ways. They've built a centralized exchange. You log into it, you have an account like you would at a Schwab, and then you can just go online and trade, different coins. And so they started obviously with Bitcoin, and they've expanded very significantly since then. And now they have hundreds, if not thousands of coins on the platform today. And that continues to be kind of their primary source of revenue. They're one of the largest exchanges in the world. I think they're the largest publicly traded exchange in the world. And so part of the constructive part of the argument around Coinbase is they are, kind of audited and regulated like a public equity. And so they have to do a lot of things, kind of by the gold standard of the U.S. public markets, which is not true necessarily of a lot of the other competing exchanges, whether it's, crypto.com or Binance or any one of the thousands of other really, small, tiny exchanges you can find either in the U.S. or even more, sketchily abroad to trade crypto. And so I think part of the rationale and the reason that Coinbase has had such success is that they are they are regulated public U.S. equity. And it's part of the reason that, a large part of their audience today is not only retail traders, but also institutional traders. And so that makes up, a big part of their revenue. Since going public, they've expanded, and really even before they went public, they've expanded the platform really substantially. So they added, a whole host of different features to the platform. They sort of co-founded a stable coin called USDC, and they sort of co-founded that with Circle, which is another crypto company that's looking to go public. We've heard rumored here for maybe several quarters, maybe several years. But USDC is the second most used stable coin around the world behind Tether. I think its market cap is in the like $25 to $30 billion range. And so if you think about that from an economic standpoint, these companies make a ton of interest income just on holding the US dollars that back those coins. And they become very, very profitable businesses sort of in and of themselves. The dynamic with Coinbase that might be a little bit different than Tether is that they share a lot of that interest income with Circle, and I think that they recently signed an agreement with Binance, so they're potentially going to share that revenue with even a third party. But it has become, in a lot of ways, the gold standard of the stablecoin universe as well, because they audit all of their stablecoins with actual U.S. Dollars, as opposed to Tether, which has come under some scrutiny for what their actual stable coin is backed by. They've been able to successfully.
For those who aren't maybe as up on crypto, and by the way, our research department came back and said it was founded in 2012. For those who may not be as crypto native as you, Bruce, what's a stable coin, just so folks understand that?
Yeah, a stable coin is really probably the best way to get into the crypto universe and out of the crypto universe. So effectively, a stable coin is a coin that's based on some currency and usually tied to the U.S. dollar, which allows you to, and it trades pretty close to $1 just based on supply and demand, but it's held on thousands of exchanges, both decentralized and centralized exchanges, and it allows you to trade. It allows you to get your fiat, usually into some sort of exchange, trade it for a U.S. dollar on a one-to-one basis, and then use that stable coin to then trade for other coins, both on centralized and decentralized exchanges. And there's a whole host of, derivative operations that you can do with that, whether it's like leveraging the coins you have, borrowing them, lending them out. it creates an entire ecosystem, but it really allows you to have something stable. So as opposed to putting $1 into Bitcoin, which could fluctuate 5 to 10% on a daily basis, you put it into a stable coin, it generally won't fluctuate more than maybe a couple basis points every day. So it gives you the stability and it lets you in and out of the system with some sort of regularity.
So you're telling me that Bitcoin is not a stable currency, or is it a currency? Sorry, I'm getting us off on a tangent.
It's definitely not stable. I don't think anybody would characterize it as stable currency or not. But I think stable coins, we'll talk about in a little bit, have become staples, I think, of the crypto ecosystem, and they look like they'll continue to persist, I think, indefinitely. So USDC has become a big part of their revenue stream. Another part of their revenue stream is what they call staking. So effectively, this allows for people to secure the network. So you basically, if you have coins, whether it's Ethereum or Solana or a host of other coins, you can stake them on a host of different networks, and that helps secure the networks. I won't get into the mechanics of it, but effectively, if I staked $100 of Ethereum, it would be paying some sort of interest rate, call it 5% interest, which me as the staker, because I've agreed to put it on the network and secure the network, I get part of that accretion just for the dollars that I'm staking, because I don't have them available to me. I can destake them at any time, but generally there's a period of time before you have access to them. So it can be 3 days or it could be 2 weeks and I won't have access to it. What Coinbase does is allow you to stake your coins on their network, and they take a percentage of it. So if I'm supposed to get 7% back, they'll take 200 basis points. They'll take 2%. They'll take something pretty meaningful. And so as you hold coins and as people become more engaged in crypto, writ large, I'd say more and more folks are hodling or holding these coins for longer and longer periods of time, and instead of just leaving them on the network or leaving them in your account, they stake them so that they get paid some interest rate over time, and that's usually inflationary on the network. So Ethereum creates more coins to pay the folks that are staking them, kind of thing, and Coinbase is a beneficiary of that. There's a couple of other revenue streams. I mean, I think it basically comes down to, they have some subscription revenue streams. So if I pay Coinbase, $25 a month or $50 a month, it will allow me to trade up to a certain amount without paying fees, that kind of thing. And that has become a bigger and bigger part of their ecosystem as more and more people start to use their network, and they realize, they're saving money by paying kind of upfront for the subscription, based licensing. And I think they also have some developer tools that they've built into the network as well that are continuing to contribute to their revenue stream as well. But it really is, in a lot of ways, a platform for everybody, from retail to institutional, from stakers to non-stakers, newbies to established people on the network, developers and non-developers. It really has been, I think, a mark of credibility for any coin to make it onto the Coinbase network, because it effectively, signals that, the preeminent brand or exchange really in crypto has accepted the coin and sort of vouched for the coin and agreed to trade the coin and be a market maker in the coin. So that's maybe a little background on the platform itself, and happy to take any questions or jump into why, this is a strong buy.
So that's why you're telling me Melania coin is not on Coinbase. And you're right. I did look it up. There is no Melania coin is not tradable on Coinbase.
It's not tradable, yeah, but it's probably they have a relatively high standard. Although I think if there's enough of a market being made in the coin, I do think they will, because they can make money on just having a high velocity coin on their network. So they would think about probably potentially putting it on, even if it is a meme coin. They have meme coins on the network today, which have no discernible value other than they trade a lot, and because they trade a lot, they can make money on just the exchange fees themselves. It's similar though to any stock exchange. A lot of stock exchanges are trading shitty penny stocks, not because they think they're good companies, but because they think you can make money on them.
So is it fair to describe them? I mean, they're like a brokerage for, so like you said, front,
For
like
toxic
Charles
assets,
Schwab.
for like totally just imaginary assets. That's correct.
For
For
imaginary
rat
assets, says the
poison.
bear.
Yeah. For what if it were like just like in some like just to get myself in trouble, like some like really smart PhD from China working in a shed doing math, and I said, okay, he did a bunch of work, and I gave him a coin. He did a bunch of really hard math problems. Here's his coin. Now it's a currency. Like, what's the difference between him doing it, or her doing it, and a CPU doing it? Like, how is the whole basis for like work? It's a different discussion, but it's just hilarious that we're even. To me, it amazes me that this even exists. This company trades proof of work primarily. Yeah, the stablecoin too, by the way. Like, that doesn't sound great either. Basically, the reason why it's stable is because it's tied to the U.S. dollar. And so it's a dollar tied to itself. So Forex in general, currencies are super volatile against other currencies in general. So the only reason why it's stable at all is because of that. So the fact that there's variance and the fact that you're earning interest income on all that, like, I'm not going to pay a multiple on that, am I? Like, that's in their EPS is interest income on just holding, these dollars. Like, it just seems like, I don't know. This little preview for how
These are all like I would say like the host of those questions are like predecessor like questions to like why crypto exists.
Yeah.
As opposed to like if Coinbase is a good financial business.
Well, let's put that in the multiple, because if ever there's any lack of faith and there's a run on all these currencies, these guys are going to suffer. Correct? Like, you're implicitly long.
I don't think so. I don't necessarily think so. Like, I mean, crypto's been around for what, like 15, 16, 17 years now. I mean, even if there's a run on these currencies, like the fact that Coinbase is backing up every stable coin with an actual US dollar means it shouldn't really impact them.
But all that activity in U.S. dollar stablecoin is basically a complementary good to these toxic crypto things, right? Like, it wouldn't exist if there wasn't a trading universe for Bitcoin and Ethereum.
Right. But I mean, I think one, I wouldn't characterize them as toxic, but two, I think that there is like a viable universe for these trades. Like if you look at anything from sort of like the number of users, the number of wallets, the number of trades, the dollars on chain, like all of that stuff has gone, up and to the right over the last 10 years. Like the fact that
comments equals future results. All right. So, there's really, I feel like you're still on the first slide. Do you have some data here? Like, I'm not the host, but I'm just sort of like, are we going to stick it in or what? Or is this it? Is this your one slide?
This is basically it.
That's awesome, actually. I applaud it if it is. Oh.
No, but I think like the first thing to think about, I think with regards to Coinbase, like has to be the regulatory environment, and like I don't think we've ever seen a more favorable regulatory environment for a specific stock ever. Like this is like straight out of the Coinbase like lobbyist playbook. Like I don't think like they could have.
It's just so Trump can steal money in this, in the middle of.
That might be true. All these things that you guys are saying, that might be true, but that is the playing field that we're on right now. Like it's like it almost doesn't matter like if he's stealing money or there's Trump coin or there's a whole. It's a money grab. Honestly, that doesn't matter. Like the fact is that it exists today.
But in 4 years, will it exist?
To your
would have
point,
thought that 4 years ago would have existed. I mean, it will exist. It has existed. It will continue to exist. If anything, all of the metrics are getting better and better. They're getting stronger.
What will
and stronger,
Obama do in his third term to crypto?
What's that?
What will Obama do to crypto in his third term? When he gets
I don't know. I think it's getting to be more and more bipartisan. Like if you look at like folks that are working towards crypto, like there's more and more Democrats that are working towards it.
Democrats,
that,
just
like,
the Democrats doing it. I mean,
there's this generational divide, I think, between the people that are pro crypto and anti crypto, and they realize that like on both sides of the aisle, they're going to need to be pro crypto. Like
it's a mind virus, is what it is.
This is very much a young man and young woman's game.
Yeah, so, it's very based. These based people.
If you want to disenfranchise the millennials and the Gen Zs, then you stay away from crypto, and I don't think they do. So, nonetheless, like this regulatory environment is so crypto positive. I mean, I've just listed a couple things here, but like they're creating a BTC strategic reserve, comptroller of currencies leaning towards giving bank charters, crypto bank charters to all of the largest banks in the United States. SEC is working towards specific crypto guidance. Like there's a bunch of VCs that are working in the administration today that are all pro crypto. Like there's establishment of councils. Like Trump went to the Bitcoin conference. I mean, everything.
JD Vance is like a crypto humper, isn't he?
Who?
Besides
JD
his
Vance,
couch.
isn't he like
Besides
a?
his couch.
He's a fluffer. He's a crypto fluffer. I thought JD Vance was also.
I don't know. He might be the next president of the United States, but nonetheless,
10 minutes.
nonetheless, like I think it is a situation where there's like incredible tailwinds on the regulatory side for crypto. I think that almost goes like indisputed.
Can I ask one quick question here? I know we got to move, but like, I mean, doesn't this work against like one of the biggest strengths of the U.S. is the U.S. dollar and how it's used in policy against foreign adversaries. So think Russia, Iran. If you give crypto legitimacy, doesn't that like weaken the stance of the dollar and the ability to play out foreign policy, whether it's reducing the amount of currency, right, and the ability for these companies to transact? If you are pushing this, does this regulatory environment stay as friendly if you need the dollar to be that policy?
Well, I think two things. I think like U.S. dollar coin and U.S. dollar tether, which are the two largest stable coins, sort of like work in favor of the United States dollar continuing to become like the preeminent institution within even the crypto universe, because it's all of the transactions are ultimately tied to a stable coin that's based on the US dollar. That's probably, number one. And I think like if you adopt a stance that's more negative towards crypto, there's a chance that you could disenfranchise the US dollar as being kind of a foundational element of crypto today. The second piece is I think like the BTC strategic reserve is designed to enable the United States to take like an important position of power, both in terms of like the amount of crypto we own, as well as like our sway within the Bitcoin specific part of the universe, which is a big part of the overall market cap of crypto today as a whole. So I think it's like, I honestly think it's like, because it's, decentralized, like you either take a proactive stance on it or you take a reactive stance, and we've taken a reactive stance to date, and I don't think that's been helpful. Like if anything, that's given our adversaries in other countries more power. And now that we're taking a proactive stance, I think like because we're one of the richest, one of the most kind of maybe forward-thinking countries in the world, we can kind of own our own destiny as opposed to reacting to it later when like a bunch of other countries take control of the crypto or take control of the Bitcoin part of the crypto universe.
Yeah, I guess I have to wrap my arms around more how we can really influence it, even if we are a big holder, because it feels like that's kind of against the point of Bitcoin. But anyways, keep going.
Yeah, so the second piece is really, as I mentioned, like Coinbase is the gold standard across all of their products, and they have all of kind of the key products within the crypto universe. I mean, they started with the exchange, which continues to grow really significantly and drive a bunch of, their enterprise value. And they continue to drive, real market share gains. Like I think if you're a retailer, institutional trader, and you want to enter the crypto world, I don't think there's many better places to do it other than Coinbase, just given the fact that they've been in the industry longer than virtually every other firm. They have one of the largest positions in this market. And as mentioned before, this is a publicly traded U.S. Security. So it is audited by a top 4 accounting firm. It is, regulated by the SEC. And so everything that they do has to be above the board and has to be more transparent than virtually, every other exchange in the world. And they've built, 13 years worth of services that are now supporting some of the largest companies in the world and some of the largest probably retail holders in the world as well. So this really is the gold standard. It continues to, drive, rapid, I think, both market share gains as well as enterprise value gains. As mentioned before, they have a very large stable coin, the second largest, stable coin in the world that will continue to, be, I think, a cornerstone of their platform. And that's something that's fairly defensible, I would say. Like building a large stablecoin presence in the crypto universe is not trivial. Tether and USDC are two of the longest standing, oldest stable coins. And so, building that type of moat, I think at this point in sort of the, crypto world would be virtually impossible, like impossible. Sorry, it could be done, but this is something that's been built like over a decade. And lastly, like they have a huge growth driver in their subscription revenue. Like as more and more retail customers sign up for the platform, they're continuing to drive expansion, along the same way that like a traditional SaaS business would with retail subscriptions. And so I think it's one of those things where because they have a bigger platform, they have maybe the best platform in terms of transparency, and they have more and more folks signing up for their service. They're effectively increasing their ARPU or their average revenue per user at a rate that other platforms won't be able to do. And so I think it's one of those things where they have a foundational platform that allows them to expand into different areas in ways that other folks can't. And that advantage, I think, will continue to persist. It's like one of those things that's very hard to fight against once it's in the open. I mean, I think there are, potential competitors, maybe like Robinhood and other types of exchanges that could probably get into, this universe over the longer term. But I think that, Coinbase's position today will enable them to do things that, other firms, probably won't be able to do. And I think like if you believe the crypto universe will continue to grow, which I do, like I think that, if you look at the last 10 years and if they're representative in any meaningful way of the next 10 years, like this is a tide that will benefit a lot of different firms, whether it's Coinbase or Robinhood or like any of the legacy firms, right, that get into this market. So I think it's, this is the best firm in a really, really good market, and that should enable them to continue to grow and drive real enterprise value. If we look at, what the financials look like, as I think about it, we spent a lot of time in kind of the tech universe. This is maybe a tweener between, the tech universe and sort of like the exchange universe. So there's, probably things to consider here that we wouldn't in like a traditional SaaS company or cybersecurity company or enterprise software company. But if you look at the metrics today, like this company is relatively modest. I probably should have put the enterprise value here or the equity value, but it's effectively like a $50-ish billion company, which is doing nearly $9 billion in revenue, growing 20%, doing $4 billion in EBITDA, and like on every growth metric, it's trading significantly lower effectively than its comps would be trading. It's more dynamic, it's more innovative, it's growing faster, and it's either trading in line in PE or trading way, way below from a growth standpoint and trading way, way above on what their absolute growth is. And their rule of 40 is world class. So it's one of those companies, I think, where, not only on an like absolute basis do I think it's modestly priced, but like as I think about it on a relative basis to all the companies in the universe that we cover, this is effectively a cheap stock.
It's because people don't believe. Let me ask you a serious question that I don't know the answer to, but like so when I think about the exchange business, right, which is their largest, you have ETFs that have come out for Bitcoin, for Ethereum, for some of the most popular coins that are traded on their exchange. I think Bitcoin, if I believe Perplexity here, is telling me that 33% of their trading volume in 2024 was Bitcoin, and then Ethereum was 13%. So you put those together, you're almost at half their exchange volume. Why do you need Coinbase if you can just trade an ETF?
I think there's a lot of things. I mean, on Ethereum specifically, like if you're buying Ethereum, you can't really stake it on an ETF. So you would be buying it and leaving like 7% of your money compounding annually on the table, which is something that I don't think, like if you're putting real money to work in Ethereum, you would want to do.
So the ETF behind that doesn't capture that? They don't. They aren't able to stake it and
I don't know.
Pay that out.
I don't know.
By the way, time check. You have more slides, or are we basically at the end here?
I'm basically at the end.
That's awesome. First of all, awesome job on this slide. It's so succinct. and like crisp, and I love it. And you didn't torture us like some people have in the past with slide after slide after slide after we agreed to like only one.
But I still have open questions. See, it didn't cover every.
But see, the thing is, this is forgive me for I have not the time to be brief. So like we need to boil it down for people. And I guess I would say a couple things I would pick at before I start my presentation is revenue growth 20%. Okay, this first of all, that's 2025 estimated. The street's at 6% for 2026. So like, and it's been super volatile, and it's just not like, ooh, it's a steady 20% grower. So let's get into that. I'm not going to let you have that sleight of hand. Like 20% growth is definitely not just a gimme.
This is definitely from the George comp slide that was produced by Cap IQ or FactSet.
Yeah, exactly. So he was too busy watching soccer games about LA. All right, let me share.
But I think, George, to your question, I think it is potentially a risk for them, but you won't. I mean, I don't know if that's the way that people will access it. I don't know what percentage of people are just accessing like the ETF and they're not accessing any of the other cryptocurrencies that you might want to invest in. I don't know if it means that they can't get.
And to be fair, it hasn't seemed to impact their business, which I thought it would. So I just don't know enough there, to be honest with you.
All right. Well, let me jump in and show you some interesting charts that might be kind of sort of point out some things about.
My title is definitely better than yours.
Yeah. So Coinbase, I have loin waist. I had coin basement, as another one. So coin wasted, but you'll see. So loin waist. So the first thing, as I dug into this, I have this meme for those who are not watching. It's Joe Pesci, and just like I look at this thing and I'm like, what the fuck is this piece of shit? Like this company is a piece of shit. And let me show you a few things to help dimensionalize. I mean, first of all, let's just go back just for a second here. I think in the multiple. Warren Buffett on the show is a god, and he just retired. God bless his soul. He left undefeated, and he, with his head held high, and he's like, this guy is saying these things have no intrinsic value. So just to be clear, that's what we're trading. That needs to be somewhere in this multiple that the Oracle of Omaha says this is rat poison, and don't give me that generational bullshit. Grandpa is a consistent alpha jumper. This is the Babe Ruth, and he's still fucking crushing it. So anyway, they don't own any Bitcoin at Berkshire Hathaway. So let's just look. This just got to play on Bitcoin. The correlation. What's the correlation of Coinbase with Bitcoin? So it's about 0.4 is what I saw. 0.36 is what I saw. I didn't have the data handy for various time periods, but let's just assume that it is. But if you look at like just the performance of Bitcoin, of Coinbase versus Bitcoin over 5 years, it's underperformed 91%. So 1 year, 62%. Year to date, 20%. So like this is like an amazing, just like short Bitcoin machine. Like, like you can just make money shorting Coinbase and owning Bitcoin. And like to me that just sucks. And it doesn't speak to, it just sort of speaks to like over a long time period. These guys, why not just buy some fucking Bitcoin? Why would you buy this piece of shit company? So we talk about market share. I'm going to give them a little bit of credit. This is transaction share on every 6 months since December 2020. So kind of the end of the pandemic on. And so you can almost, in the left chart, I've got kind of everybody, some key players in the top 10, that bright orange line in the middle. Like that's actually kind of fascinating. Coinbase has had some of the most stable share out of anybody in the industry, which kind of speaks to Bruce's point about, these guys are kind of a brand, like they're kind of like the clean kid on the block. You've got a massive amount of share loss from Binance over the time period. But one thing that's interesting on the right side, Crypto.com, holy mackerel, just massive surge past Coinbase. And they've gone to like kind of like, as of in June, they're at 12 points, and they were like just below 10 in Q4. But that was from basically, not in the top 10 anyway, from 0% effectively for like years. So Crypto.com, those guys are, definitely Trump fluffers over there. They're fluffing way more effectively than the guys at, and let's dig into this a little bit more. Why do people buy crypto? Or buy Crypto.com or choose them? If you're a cost-sensitive trader and interested in staking in DeFi or want a feature-rich platform with global reach, like they have more global presence, they're cheaper, more featured platform. Coinbase is kind of like just, they're more streamlined, they call it. So they have less features, and they're U.S.-based, publicly listed exchange. So basically, you're a grandpa in the crypto world, and when a U.S. traded publicly listed, company, okay, fine. But if you're just cost sensitive like most people, you're trying to make money, you got to go to crypto, and the market share shows that. Also, I'm going to argue these guys have not been fluffing the Trump administration at the level of other companies. I will say Armstrong was late to the party, and he did some public dancing with Trump, but they've got some significant people. Like this guy Chris Lehane is now on their board. He's out there talking shit against Trump right now. Coinbase's board of directors and prominent investors had donated $22 million to Democratic candidates, only less than $5 million to Republicans. They have this global advisory council that's just got all these Trump critics in it. So, and this is all the source of this information, FoxNews.com. So they're telling all the Fox News acolytes, hey, these guys are not the cool ones. Go with Crypto.com, I guess. I don't know. But another thing I want to point out here, look at this shit. So, this company's trading at 26, he said 27 times 2025 EPS. It's expensive. And so for that, you get, okay, look at this growth. December 22 in sales is minus 59, then minus 3, then positive 111, then 20. There's the 20% you were looking at, Bruce. And then it's modeled to be 6 and 2. A 24 to 26 CAGR of 13, and not this revenue stream is super volatile, as is, Bitcoin volumes, right? And so in people are modeling gross margin decline here of about 1,500 basis points over the next 2 years. So it's it's pretty nasty. So they have earnings growth, net income growth of basically nothing. December 25, it's down 20% to 2 billion, and it's flat in 2027 at 2 billion. You have a little pop in 26, but it's what am I paying for? Why am I paying 26 times for an asset that is way underperforming Bitcoin with no revenue growth at a high price with all kinds of regulatory regime risk? Here's another thing too. Transaction growth was 158% in Q4. Revenue growth is only 138%. So and they have other things like stablecoin in there. I'm sorry, I should say this is transaction growth. This is all transactions, including stablecoins. So, they aren't seeing they're seeing some kind of compression on transaction, value. Here's another fun thing to look at. I'm calling it the crap table. This is also, cap table. Who's in this bad boy? Number 1 is Vanguard. Number 2 is BlackRock. So you got SSGA, all these quants in here. Geo. These are crap. There's nobody blue chip in this company. ARK is number 7. Kathy Wood has Wood for this company. So that tells you enough right there. Now you do have, Mark Andreessen, who you may have heard of, owns about $1 billion.
Great investor.
Yeah, he's a great investor, but he's also got the Trump mind virus.
I was being sarcastic.
So he's Netscape, right? So he knows how to get the money. He's the classic guy. Get the money.
Vanguard's kind of a blue chip company.
Who?
Vanguard.
I suspect this is passive money. This is usually passive money.
They own 9% of the company.
Almost. Yeah, but then BlackRock. Both of those fund advisors. These are quants. These are people who have no fundamental basis on the stock, and they're the biggest holder. So it just tells you there's no fundamental owners of this thing. People know this is toxic trash, and it trades as such. Why would you just buy Bitcoin? You want Bitcoin exposure. So conclusions. It's tied to a toxic asset class with no intrinsic value, just work completed. No clear moat. Crypto.com is just disrupting them left and right. Probably on the wrong side of the Trump trade. Gross margin deteriorating. Multiple not just by revenue or earnings growth. So mic drop. This thing is a turd. I have illustrated my slide as such.
All of these things you would have said 10 years ago about this stock, and none of them would have been true. They would have all been off by 100x. You would have said that. You would have said there's no clear moat. Anybody can get into the exchange game. The Trump thing wouldn't have been relevant. Gross margins. You would have said this is a zero sum race to the bottom game, and multiples aren't justified by revenue because there's no growth in crypto because it goes back to being a toxic asset class. But meanwhile, the price of crypto is up by 1,000x over the last 10 years. An assumption that it grows over the next 10 years by some substantial amount. The fact that the U.S. government is effectively backing it now. I agree. There's an argument. I agree. There's an argument to say that all crypto is a toxic asset class, and everything associated with crypto would be toxic then. But that just historically has not been true.
But what if? What are the argument of why? Let's just put that on the table, off the table for a second, and agree. Okay, fine. This is going to exist. There's always going to be people buying tulip bulbs now, and treating them as a store of value. Great. Why buy crypto and why buy Coinbase rather instead of just buying Bitcoin or a basket of Ethereum and Bitcoin and Dogecoin and Melania coin. Like, why would I buy this thing when they have a pretty strong history of underperforming Bitcoin?
I think it's because you're buying this for a number of different revenue streams. They aren't just tied to one specific asset. I think that the belief is that the entire crypto ecosystem will continue to go up, not just Bitcoin, not just Ethereum, not just like the quote-unquote blue chip cryptos. This is an ecosystem play, and if you want to play the entire ecosystem and not just one very volatile crypto, this is the best way to do it. And like, I'm a believer, I think, and maybe some other people are, that this is an ecosystem that will continue to expand. Like, it will continue to grow. The overall market cap of the entire crypto universe will continue to rise. And if you want to play that in some meaningful way, this is the best way to do it.
Well, I think there's other, other folks you mentioned earlier, Robinhood, right? Robinhood is trying to build out a very comprehensive platform. They allow you to invest in stocks as well. They're broader platforms. Like, I think if this ecosystem continues to expand, you're going to have more and more competition in this space. And so if you're a user and you go to Robinhood as a one-stop shop, or banks move into this, like, why would you choose Coinbase over, someone that has a broader breadth of offering that allows you to invest stocks, bonds, everything that you want, currency, versus a Coinbase? So it feels like they're in a disadvantage maybe if other folks do move in and this continues to be a robust market. And today, like, their margins are very high compared to like traditional brokers. And so that competition comes in. I've got to imagine fees are going to start to come down. They're no longer a monopoly in where they sit.
But I think it's one of those things, like, so for the major cryptos, I think, it might be true that, like, for Bitcoin specifically or Ethereum specifically, like, their share of that trade might go down. Although, like, there are Bitcoin ETFs right now that you mentioned, right, where you can trade them on effectively any brokerage today. And we haven't really seen their share of, like, their market share of exchanges erode that significantly. So I think there is still value in the product itself, even for the largest cryptos. But then you think about the tail of the thousands and, like, unfortunately millions of other cryptos that are out there today, and those will never be traded really in any, like, reasonable time frame on, like, the major exchanges. And so if you want to play the market, and not only that, you want to play, the second biggest stable coin, which I think will get much broader adoption with the Trump administration just generally in the future. If you want to play the subscription model, which I think, Coinbase will have and other people won't. If you want to play the staking part of the business, which I think Coinbase will, have a better or more ownership of than, a Schwab would, or maybe Robinhood will eventually, but certainly not in the near term. Like, it's one of those things where it's like you're playing the entire ecosystem. You're not just playing, like, Bitcoin specifically, which I agree. Like, if you're doing that, if you're hedging this bet all on just Bitcoin specifically and access to Bitcoin, it's probably, like, not worth the trade.
I mean, I think, I don't know. I mean, it's interesting, but I still think competition is going to lower fees, right? I mean, I think your argument is the pie will continue to get bigger even if fees come down. And so it's, the amount of volume that goes way up. You have other entrants that come in, your ASP maybe per transaction goes down, but those offset each other.
You're seeing that already, for sure.
I think,
and it does seem like staking is coming to the ETFs, by the way, which are issued by some other brokerages like Fidelity and others. So it's not there today, but like for Ethereum, it sounds like they are taking steps to try to bring that to those products. So should we reveal our true positions?
Yes.
Bruce, I feel like you're a true bull. I've known you to. I think you told me to buy Bitcoin in 2013, and I foolishly did not listen to you. But anyways, what's your position?
I did tell you to buy Bitcoin in 2013, and you foolishly have turned me down every subsequent year.
Like the waitress at Applebee's and me.
Look, I'm a crypto bull. I'm a bull on Coinbase. Like, I do think that they have, like, a moat that it's hard for folks to, I think, build the same type of business, like the same type of, like, foundational business that they've built in a bunch of respects. I think there are certain parts of maybe their business that will get eroded over time. But I truly am a bull. Like, I think this is like a massive rising tide. if the last 10 years, if even half of what happened in the last 10 years happens in the next 10 years, like they'll be one of the key beneficiaries of this like entire ecosystem, and I think they're well positioned to take advantage of it.
Yeah, I mean, it's pretty obvious. I mean, I'm still pretty bearish on this. I still can't get my head around Bitcoin, even in these currencies. At the end of the day, having them in your portfolio as a kind of like an asset class in the hedge against inflation and a weakening dollar, sure, I'm there. Like, there's enough confidence, enough participants. It's hard to see this market go away, even though I think it's absolutely absurd. I'm with Warren. It's at the end of the day, it's basically a fiat currency. And there's a reason it's convenience currency. People can kind of hide stuff, or at least from the tax authorities, and it's just fluid. I get it. There's a need for some exchange of value that's not tied to a currency. So I kind of like buy into that, but I'm just going to buy Bitcoin if I really want that, and maybe Bitcoin, Ethereum. Those two things probably are enough, and I just don't see why I need these guys. They don't have a sustainable competitive moat, in my opinion. How does crypto.com go from like 0 to 12 in a couple 6-month periods? So it's sort of like in a year. So it's like doesn't hang together for me. Yeah, they've had staying power, but it feels like at a minimum more commoditization. You see it in their margins. It just seems like there's nothing as expensive as it is. Yeah, can't get on board.
All right, so I get to break the tie. This is one that I feel like I have less of a strong stance on than most that we've done. But I'm going to be slightly bearish here, mainly around the competition argument. I do think, some of these like tail coins that exist, like I don't think they need to exist, and you probably have one or two dominant coins, which is Bitcoin and Ethereum, and who knows, maybe there's a handful of them, but not like you have today. I think those other ones will die out. I think other players are going to continue to come in and compete in those markets in different ways. So even if they continue to be the dominant player, I think their ASPs are going to come down on that. They're very high margin today, extremely high margin. So I don't think that's sustainable. And then you have things like, like if the U.S. government is serious about being in the business of having a digital currency, like they may issue their own digital currency. That's not something we talked about here. So I don't know if you push back on that one, Bruce, but like that would worry me, right? That their kind of stablecoin business becomes less relevant. Certainly if the U.S. government says, hey, we're creating the Eagle coin, which is a stable coin, and that's our digital currency. Everything else, throw out because it's not the official thing. So I think there's just a lot of risk here. I think this thing's going to be volatile no matter what, right? So if you want to play volatility, like this is a great stock for it. But like personally, I don't love the volatility. Maybe I would buy it super cheap, but I'm going to stay on the bearish side.
So I won. Good to know.
George is a permabull on
Coinbase crypto
and crypto.
Perma-bear, yes. I'm still bitter about missing out in 2013, so I'm just going to be a curmudgeon forever.
The Fred Hickey of crypto.
Yeah. If you know who yes,
Does
Fred
he still
Hickey
write
is,
that letter? I want to know if he still writes that. What's it called? Like the high-tech whatever?
Yeah.
Investor
I think he
or
probably
something.
does, right? That was like the original
Newsletter for tech.
original newsletter, yeah.
Yeah, our old boss
And
used
he's
to get it.
bearish and writes about gold.
Eventually, he's right.
I've seen him. He's still tweeting. So, anyways, he's been pounding the table here for gold.
Yeah, high-tech strategist.
All right. Well, with that, gentlemen, another one in the books. As we say, as we head out, bulls make money.
Bears make money. Pigs get
slaughtered.
Oink oink. We out.
Bye-bye, everybody.
Say make money, money, make money, money, money.
Make money, money, make money, money, money. Money makes the world go round. I'm the talk around town. Remy gave me the sound. Fat pockets. I need that Skrilla on the Rilla. Fat pockets. I need that Skrilla on the Rilla.